Welcome back, everyone, to the third installment of The Report. I'm your host, Sam Badawi, and this is our co-host as well, Zach Pandl. And we have quite a bounce in the crypto markets. Just to kind of preface and bring everyone back to speed for the last episode in case you caught it. And if you haven't, of course, go back and check out those last two episodes again. But we were discussing many macro factors that are attributing to possibly the downward fall of crypto. But on top of that, we are coming back up here, bouncing off of 60K for Bitcoin. Meanwhile, other cryptocurrencies are bouncing as well, and today continues to be a great day. We have many topics we want to cover today, more than a few, but the ones that we're specifically going to talk about, of course, is the Bitcoin price action and what potentially led to that downfall in crypto, and if we are going to see a bounce. Bitcoin's dual nature in terms of the scarcity and government dependence on crypto. In addition to that, the investment thesis. We're going to touch again on the investment thesis of crypto. Obviously, you have crypto being as volatile asset as it is, one of the most volatile assets, arguably, in the financial markets. But we need to always revisit the investment thesis as a reason why we're investing in Bitcoin in the first place. Myself and Zach are going to touch on that one again. Finally, market outlook. Of course, we always need to look forward to the horizon because everything does trade in unison for what is going to be coming up, not what had already happened. And finally, regulatory clarity in terms of crypto. Zach, good morning. How are you today, sir?
What's up, Sam? I am doing great. Maybe it's the crypto bounce partly lifting my spirits, or a good Super Bowl or whatever. But yeah, I'm doing great. Looking forward to this discussion.
Yeah, great. I mean, obviously, you just mentioned it. Crypto had bounced. I think it's about 11K up from the 60K bottom that we had. That we all thought that was the bottom. I thought 79K was the bottom. I thought 90K was the bottom. I'm sure there are people who thought 124K was the bottom after it topped out at about 126, 127. But here we are today, which might actually present as an opportunity for people who are long-term crypto bulls. I mean, a 50% retracement is certainly no joke. That's a lot of volatility to go through, especially in the face of the rally in precious metals that we've seen continue since the last time we spoke to each other back in early January. And here we are today, a much newer Fed who's supposed to be coming in. We don't even know actually if he's officially nominated or not, but his policies, do you think his policies do support crypto and decentralization? What are your thoughts about Kevin Warsh, who's a leading candidate as far as a nominee from President Trump? Oh, hold on a second. I think we might be having some technical difficulties there. Zach, can you hear me? Okay, good. So I asked you, we obviously have a new Fed chair who is unofficially nominated, not exactly officially nominated yet, according to the poly markets, because if he was officially nominated, that would be 100%. I've actually been taking a close look at this one. We did receive some news over the weekend, and I'm not sure how much clarity there is, how factual it is based upon, let's say he wants to open up some sort of side to basically prop up the bond market, but specifically in the long-term yields. Wondering your thoughts are as far as Kevin Warsh, and that is his first name, right? Because I feel like Kevin. I keep on hearing like so many, like there's Hassett and there's all these other people, but Kevin Warsh, who is the nominee of the Federal Reserve as far as the chair goes. What are your thoughts on that? And what do you think the impact is for his monetary policies in terms of cryptocurrency?
Yeah, thanks, Sam. This is a huge topic. You know, before crypto, I was a professional Fed watcher at a time in my life. And while Kevin Warsh was a member of the Board of Governors, so very familiar with his past statements, read every speech he gave at that time, that sort of thing. So we have a pretty good understanding of who he is and what he's interested in. Let's talk first about this thing that happened over the weekend, a kind of accord between the Treasury and the Federal Reserve. I think this is a big open question. Federal Reserve created 1913.
I think it paused for a minute there. You were saying that the Fed was created in 1913, which is actually very true. It's surprising because they've been around for a while. Oh, Sorry, do you want to backtrack a
with
little
the
bit? Because
U.S.
you're talking about
Treasury.
1913 when the Fed was created. And I believe there was a little bit of a blip there. So maybe you want to continue there for the audience.
Yeah, I'll start over. Sorry about that, Sam. So,
Okay.
Kevin Warsh proposing this a topic of an accord between the Treasury and the Federal Reserve. Well, the first accord was in 1951, where we basically established an independent Fed. The Federal Reserve can conduct monetary policy to manage the economy, and it wasn't responsible for helping the government borrow money. And that had been the case prior during World War II. We needed to issue bonds to finance the war effort. The Federal Reserve basically worked hand in glove with the Treasury to make sure it could find a place to put all those bonds, and it capped bond yields, had a kind of what we'd call yield curve control in modern parlance during World War II. The first accord, 1951, was the end of that. And what's being proposed again is a kind of another accord. Now, what does this look like? That nobody really knows. It hasn't been spelled out. But the risk for the U.S. dollar, for U.S. markets, is that this becomes a cozier relationship between the Federal Reserve and the Treasury, something like what we saw before 1951. And it puts the Fed in a position where it feels like not only is it making policy to manage the economy to keep inflation down, but it's also managing policy to help the government borrow money. And this is actually something, again, you've seen in U.S. history, you see in some emerging market economies. My view is that, there's lots of different particulars that need to be laid out, but I would see this as a risk of Federal Reserve independence, and therefore a risk of higher inflation over time. And maybe it wouldn't be such a big deal if the U.S. government didn't have to borrow so much money. But at the moment, we're running big deficits. We're issuing tons of bonds. And so the risk here is that this drags Federal Reserve into the business of financing the Treasury and away from the business of just managing inflation. And that could be considered a threat to Fed independence, again, depending on all the specifics. So an important thing to keep an eye on when we hear Kevin Warsh's nomination hearings. He's been nominated for the Fed chair, but he needs to go through a process of confirmation by the Senate, just like everybody else. And in that discussion, he's going to have to kind of cough up more details about his views on these topics. So I'll be closely watching the nomination hearings to hear what he says on this idea of an accord.
Yeah, and you mentioned that you were a Fed, what's called a Fed whisperer,
Fed
Fed
watcher. Fed
watcher.
watcher.
Okay,
Whisperer
Fed
watcher.
watcher.
Yeah,
Which are like, it kind of reminds me of like Nick Teramos, and how he's like kind of Fed whisperer, Fed watcher as well. So obviously you were a Fed watcher during the Great Financial Crisis and in the time when Kevin Warsh was a Fed governor. So I believe that meant that he was an FOMC member, so he was able to vote, correct?
That's right.
And if I recall, he actually wanted to raise interest rates around 2008, right? So what was his reasoning for it as far as dissenting from all the votes where they basically brought rates to near zero around that time, if I recall. And then they were pumping a lot of liquidity into the system, expanding the Fed balance sheet. I mean, essentially, that was around the time where basically QE was invented, or QE gained its term that was coined around 2020, the money printer, right? So one thing that I noticed about Kevin Warsh was that he is for cutting rates, which is okay for capital markets as far as borrowing goes, but he is also for shrinking the Fed balance sheet, which essentially is the opposite direction of what we're doing right now as far as QE goes. I think it's about $30 billion monthly for Treasury bonds. Which is putting a bit of a ceiling in terms of the long-term rates, right? So one thing that the Fed has not done in a long time is yield curve control. And there's always been a bit of conspiracy about that, or maybe a thesis around that, where if they start doing that, it would not pose a good sound for the bond market, because the bond market is supposed to be the one buying the long end of the curve, and the Fed controls the short end of the curve. But if the Fed were to practice yield curve control, then that might pose an issue where you have a buyer of last resort. So why not just sell into them, right? It doesn't really pose a good amount of confidence for the long-term yields. And therefore, shrinking the balance sheet would mean that it should mean that inflation is going to be stabilized. But arguably for the bond market, they're the ones who are going to dictate as far as the demand for those long-term rates. What exactly was his reasoning in 2008? And is he trying to impose those same plans in today's market as possibly seeing inflation as a long-term issue?
Yeah, this is a great question, and there's a lot of backstory on all these topics. Kevin Warsh didn't wake up last year and come up with his views on these topics. These things have been building up for a long time. Quantitative easing, that term was first used in Japan. Japan had these kind of boom bust and a deflation risk before the United States, and then when the financial crisis hit in the United States, 2008-9, we started using this term again, U.S. style quantitative easing. And then, people forget about that it even started in Japan. But anyway, these sort of topics about what the central bank should be doing with its balance sheet, how many bonds it should be holding, how big it should be in financial markets. These are kind of long-running debates. And Kevin Warsh clearly has a differentiated.
Let's see here. Looks like we possibly have gotten a little bit of a connection issue. Oh, sorry, Zach.
You can think of it as he wants to drive.
Sorry about that.
That's all right. Yeah, it looks like we have a connection issue here today, but I'll just carry on.
Yeah.
Look, I think how people can think about it is Kevin Warsh kind of wants to drive the car with both feet. When you learn how to drive a car, you're taught to just use one foot and switch back and forth between the gas and the brake. Think about kind of driving with both feet, where one is the gas is quantitative easing, or what we're doing with the balance sheet, and the brake is like interest rate policy. So what he wants to do is take a little bit off the gas. He wants to, maybe give the economy less juice with the balance sheet. So shrink the balance sheet and be less active in kind of pumping the gas with that tool. However, he wants to also ease off the brake at the same time, maybe cut interest rates. And so the kind of question for the speed of the vehicle essentially is, what is the net effect of those two things? If you're easing off the gas and off the brake, is the car going faster or slower, right? And that's how you should think about it. So shrinking the balance sheet, that's in and of itself a negative for the economy. If that were the only thing happening, we would say this is a negative outcome for asset prices and for crypto, frankly.
Yeah.
But if he's also kind of easing off the brake and cutting interest rates, lowering short-term interest rates, if the car has some momentum, maybe it picks up already, and that could be positive for the economy, capital markets, and crypto. So that's really the kind of big question, is we don't know what the net effect of these things are going to be. How enthusiastic is he going to be about reducing the balance sheet? How open is he going to be cutting rates? I don't think he wants to crush the economy in any sort of sense, or the housing market, or jack up mortgage rates. So I think it's going to be a pretty okay outcome. But it is true, he has this view that we need to be doing less on the balance sheet and changing the mix of what we're doing compared to what the Fed is doing today.
Yeah, no, it is a bit confusing. Well, for me, like, interest rates has basically been the center of topic for the Fed for 3-4 years now, since they started hiking rates, since they ended QE back in 2022. And now the market is kind of shifting to keeping an eye on the Fed balance sheet. I mean, historically, even if the Fed stopped quantitative easing back in 2022, they weren't necessarily doing quantitative tightening. They were just letting the bonds mature on the balance sheet and not renewing those bonds and not buying back those bonds. So in a sense, that was not quantitative tightening, which in your case is pressing on the brakes. But in this case, maybe, like you're saying, he's no longer going to be pressing the accelerator anymore, pushing the gas anymore, but letting the car roll, right? So if he's not braking, the car's going to roll. Well, not with an EV. I know a lot of people own Teslas out there. There is regenerative braking, so it's going to brake no matter what. But in this case, let's say your Tesla was charged to 100%, it would turn off the regenerative braking capability, and the car would just roll just like any gas car. Since we already have the momentum with the interest rates, like he is dovish when it comes to interest rates. He wants to decrease those interest rates down, and his target for inflation, as opposed to Judy Shelton, is actually around where we are right now. So that might not pose an issue for him, especially when you think about these true inflation rates that you see, where inflation is like less than 1%. Certainly the K-shaped economy, certain people are feeling it. but it hasn't exactly gained much confidence for the average investor when they're looking at all these software stocks that you mentioned, how crypto went down to $60,000 per coin. And then there was decline correlated with the sell-offs in high growth software and early stage tech stocks, because again, like they have to borrow debt in order to fuel their growth. So if we're looking at outside of just risk assets, when it comes to high beta or high debt companies that need to fund their growth, let's look at precious metals. Okay, we saw that silver and gold were like reaching all-time highs, pressing all-time highs every single day. And I believe the last time we spoke, silver looked like to a lot of people that silver was topping, and then it made another leg up. But since then, we had that massive 30% down on day in silver, and we haven't exactly reached those highs. So now we're seeing a bit of a bounce back in precious metals, where silver and gold are up. I actually did not check the charts.
Up small today.
Are they're up today? Yeah, they're up today. Oh, actually, it's up higher than it was last night. Silver's up 7.5%. About gold is up about 2%. Gold actually has not retraced back to its all-time highs, but it's actually around the 50% retrace here. And silver, it didn't even do a 50% retrace. Mind you, silver has been on a crazy run, and obviously you have copper, platinum, and all these other precious metals as well. But for a while, it was that they were selling off Bitcoin and crypto, and they were buying a lot of gold and silver. But now we're seeing a little bit of this dual nature effect. So like in terms of, do you think that we finally hit that pivot point? And also kind of explain your thesis on the dual nature of crypto, right? So do you think moving forward, crypto will act more as a hedge against inflation and a hedge against the not the de-dollarization, but dollar depreciation?
These are deep questions, but an important topic. Let me say at the outset, I think, just to be clear, there's a big difference between Bitcoin and the crypto asset class. And the crypto asset class has millions of tokens, 300 or so, maybe, reasonably investable tokens. And Bitcoin is only one of those. And Bitcoin has a particular use case. Bitcoin is more of a macro asset or scarce.
Let's give it a second here. Let's see the price of crypto is doing. Maybe this isn't a hiccup in the crypto markets. Okay, crypto's holding up right now. It's still around 70K.
Commodity.
There you go. Welcome back.
Use case as a scarce digital commodity. Most of the things in crypto have nothing to do with this macro thesis. They're about stable coins or tokenized assets or decentralized finance or artificial intelligence or video games, so many other use cases of blockchain technology. So first off, just to clarify that we're just talking about Bitcoin in this case. Look, I think when you look at markets, it's self-evident that Bitcoin is trading more like a growth asset than like gold. I mean, that's obvious from the chart. I don't think that invalidates, though, the idea that Bitcoin is a longer term store of value, and I certainly wouldn't be in any way ready to give up that thesis. Bitcoin is a store of value in the sense that it's going to be around way longer than all of us. It's going to be around doing its thing, well after everybody listening to this call or their children are long gone, right? So in that sense, the network is a very resilient thing. And the asset, the Bitcoin, the asset is scarce. It can't be inflated away. So it's a store of value in the sense it's something that you can put away today, and it's going to be around in hundreds of years. Now, of course, it has ups and downs in the market. And when we look at the kind of correlation with growth stocks, what that tells me is basically the marginal investor in Bitcoin in the last couple of years was a growth investor. Somebody that invests in AI, in quantum stocks, and satellite technology, and also in crypto. And the reason that they invest in crypto is they think that it is also a secular growth industry, that blockchain technology is going to be a growing part of our financial system. And so these assets naturally fit in a growth portfolio. Now, it does kind of create puzzles with investors about, when gold is up and Bitcoin is down. I can promise you we'll get lots of questions about this. But Bitcoin is both of these things. It is both a growth asset and a long-term store of value. And I think we just need to get used to that until the longer run, in the many years in the future, when Bitcoin has achieved the same status as gold in markets, when it's held by many types of investors, including central banks. It probably will behave just like gold does today, with a lower volatility, lower correlation to stocks, and probably lower returns as well. Well, what we're investing in when we invest in Bitcoin is a future in which it's gaining ground, gaining adoption, gaining traction on gold in an internet native economy, where we think it'd be much more obvious that the main store of value asset is a digital internet native thing rather than a physical object, a rock that is a gold. So it's both things, Sam. It's a store of value. It's a growth asset. That creates some confusion in markets. I think investors just need to kind of have both concepts in their head at the same time.
Yeah, I think the downfall and also the upheaval of Bitcoin and Ethereum and all the banks that, or not the banks, but all the companies that were basically opening a treasury of crypto, whether that's Solana, Bitcoin, or Ethereum. I think a lot of the drop that we saw was a bit of an unwinding or a deleveraging. I mean, crypto has been an insane bull run since 2022. It went from like 15K all the way up to 127K and topped out, and we're down to about a 50% retrace. And arguably, near the top, it got, I don't want to say a little too bullish, because people can be bullish for a long period of time, but the amount of leverage people were putting into crypto needed to get unwinded. I mean, obviously, if you have even gold and silver, like the amount of unwinding that we saw recently was probably less of a fundamental perspective and more of deleveraging in its nature, right? So if you have like hedge funds that have hundreds of millions of dollars in leverage assets of the underlying in terms of gold and silver, and then they all either get margin called or they sell their calls or whatever it is the market makers are going to have to hedge against that by selling the collateral that they originally put up when they sold those calls to them. And I believe that crypto is probably a bit worse in that nature. And what we've seen was that deleveraging, was that ultimate deleveraging of all of these treasury companies that were acquiring it. They weren't exactly selling, but they really had no choice but to not buy at the same degree that they were buying before. But then again, the retail trader can be very powerful if they all act in unison. And probably for the last 3 months, there was a point when crypto, like when a lot of people were like still bullish and they're kind of buying the dip. But then some of the weak hands ended up selling. But unfortunately, some of those weak hands ended up selling and they had leverage on. So it kind of increases the volatility of that deleveraging that we did see recently. But nothing's really changed for that matter. In fact, the thesis has actually gotten more bullish since then. But clearly, when you have high beta moving at a very fast degree, you're going to get a lot of excitement, a lot of momentum chasing, and the momentum goes both ways. I mean, I always tell people, like, honestly, all the time, like, look, you're either bullish long-term in crypto or you're a very short-term trader. Like, there really is no, like, I'm going to swing these leaps for like 2 years in crypto, because you'd have to have a very strong stomach to do it. But especially since you're considering leverage, you need to be good in your timing. And I feel like that timing stopped a lot of people out. And that's what ultimately made crypto have Bitcoin, I think, had its largest drop in almost a decade. It dropped like 10K. So what is that, like a 15-20% drop in just one day for Bitcoin? And it was honestly, I think I remember that night when it was like around 60K. Like, that's when a lot of people just got bearish, right? Even people that have been like uber bullish, and you're seeing like these charts, or you're seeing like these pictures of wallets where it's like, oh, Satoshi Nakamoto was selling his Bitcoin. It's like, that's not actually true. But when that volatility increases, people start getting fear, uncertainty, doubt, or FUD, and then false rumors start getting spread around, and that was kind of fueling the way down. But I think that, I do agree with you. I mean, there was a point where it wasn't too long ago where crypto was extremely volatile up and down. But I think that as time does progress, you start to get a lot of big money who puts the money in Bitcoin or buys Bitcoin and doesn't like sell it or trade it, there's less volume in the markets as opposed to how much market cap it has. And that does drive the volatility down. I mean, I still remember when like MicroStrategy used to have crazy moves up and down, but now it trades below NAV and it's not as volatile up and down as you would normally have seen like a year or two ago, right? So I do think it's better that it's less volatile, so that way you get a lot more hodling in there and a lot more banks don't have that much risk in the board by buying or adding crypto to its treasury. But at the same time, like, look, we're in the midst of getting a new Fed chair, and that's a massive policy change. And we don't know what's going to happen. I think that uncertainty is what's really bringing the volatility or making the volatility more sound, is the uncertainty in the whole scenario. And once we actually do get that clarity, you will probably see that stabilization that you were talking about.
Well, let's hope so. You know, what you just described, I think, is a very typical back and forth that you see in every market. You know, when markets are up, when when prices are cooking, you see people adding leverage, you see new businesses, you see new media, you see new joiners into the space. These are classic, kind of boom cycles. And then in crypto, these things can very quickly reverse, where price comes down significantly, was about a 50% drawdown. And then everybody loses all hope, forget what the investment thesis was altogether. And maybe people leave the industry or they close up shop and all this. And I find it kind of amusing, like the extreme by which the asset.
Let's give it a second here. It's like the internet just waits for Zach to start talking.
It's a class.
There you go.
Technical. So look, I think the goal for investors should be just to keep your eye on the prize. You have this kind of structural trend. Regulatory clarity driving adoption of public blockchain technology, stable coins, tokenized assets, digital currencies like Bitcoin and Zcash. These are all going to be part of our financial future. And the market gives you opportunities either to build positions in those assets or to let go of your assets at compelling prices to somebody else. Buy the assets in these moments of despair, where the market seems a little bit directionless. These can be great times to accumulate these assets and position for that trend. And at the same time, at moments of euphoria, those when other investors have a lot of FOMO, those can be good times to let go, at least temporarily, of those assets. So for me, this is an opportunity in markets. This is a temporary setback in the context of a mega trend for capital markets. And I think a pretty compelling time to be looking at the crypto asset class. And that's been Grayscale's message to investors in the last week or so.
Yeah, people got very bullish at the top. It happens all the time, like there's that saying where it's buy low, sell high, but just something that's just so easy to understand is very hard to execute, especially when you're caught in the emotions of the market. Like for me personally, I just have, and I've said this many times, I just have a HODL crypto portfolio of just, blended currencies, obviously weighted the most in Bitcoin and Ethereum and so on. It's basically weighted mostly by market cap. And I have seen opportunity to just slowly add to it over time at certain levels. And, it's not a major part of my portfolio. So if it does go to zero, which I don't think it will, considering how much credibility it has at this point versus like 10 years ago when I was trading this thing in 2017. But nothing, it's funny because price really dictates a lot of narrative, and nothing's really changed in the last year when it comes to crypto. Obviously, there's some headwinds you see in the government when it comes to certain practices and certain policies they're instilling with banks as far as using crypto and deregulation and regulation and so on. But it's only going to become more regulated because, as you can see from the US dollar, the DXY, the top of the DXY was like 115, right? So if I pull up the DXY over here, we topped at 115 back in 2022. But if you zoom like really far out on the monthly chart on the dollar, it's only going down. Like it is just trending down. And there's going to be a point where the US dollar, and we already had back in Nixon, where he didn't back the dollar with gold, there's going to be a point where you're going to have de-dollarization, and it's not going to happen now. It probably won't happen in the next couple of years. But when it does happen, you're going to have to switch over to different currency. And you're already starting to see the adoption of Bitcoin happen across the board with a lot of countries, not in terms of making that their national currency, but in terms of allowing transactions to the system. And like we've said many times, like instant settlement of transactions or near instant settlement of transactions is probably most crucial for a lot of payments around the entire world. This is probably the only way you're going to be able to get that while reducing the overhead on it. I mean, like we've said before, like Swift transactions or wires or global wires, whatever it is, like those take a lot of time. Those cost a lot of money, especially with infrastructure in the entire system. With this, the infrastructure is kind of already built out. You just need to instill the security. And I think security is probably the most at question when it comes to crypto. But everything is there for everyone to see. Like you can't exactly, I would say that knowing where the source and the destination of the wallets are when it comes to crypto is probably the hardest part about it. But there's always a paper trail whenever it comes to crypto. So you can always find the source of all that money. I think it would actually help with the security of just securing funds and figuring out, catching all the thieves and everything. Obviously, crypto is still heavily used in the black market, so it's not that easy to track, but it'll eventually get there. I mean, it's digital, right? So when was the last time? I think every single time I go to a store and they give me like change and like coins or something, I'm just like, what is this, right? Or it's like, we only accept cash. It's like, what year do you guys live in? How do you not accept? I guess they don't want to take that 3% hit in terms of the trend.
Simple as that, yeah.
Yeah, I mean, they don't want to take that 3% hit, and maybe they just want to, they just want to not like report on their taxes or whatever it is. But at some point, like, look, there's an incentive for the government to have or instill digital currency across the entire board. And it's really only a matter of time.
Yes. I mean, we have a bright future ahead. And look, I think these points about transparency are one of the key benefits of blockchain technology. When it comes to payments money, there's all kinds of things that we can say. But like one place where the transparency, I think, has been a big winner is in the exchange space in crypto. Hyperliquid is a new exchange a relatively new exchange in our space, covering futures markets. And really what it's doing, something similar to a lot of the other exchanges, but with just a high degree of transparency. Users can know exactly what are all the rules, what are all the parameters, why am I getting liquidated over this or that? You could disagree with those differences, but it's very transparent. And I think something like that, like transparent platforms based on blockchains and the fairness that brings to commerce for the business of exchange is exactly what public blockchains are supposed to be all about. So yeah, transparency, absolutely key and kind of one of the main benefits of using this for financial applications, whether exchange, payments, borrowing, lending, anything less. A really high degree of transparency, in my view, is a very welcome difference from the traditional financial system.
Yeah, so let's discuss two of the major fundamentals when it comes to crypto. Obviously, there's been a lot of regulatory clarity in terms of driving stablecoin and token asset adoption, with Robinhood doing it, especially in the private markets, giving retail access to private markets through tokenization. What are your thoughts about that fundamental trend, and do you see that progressing throughout ex-US as well?
I have no doubt that stable coins and tokenized assets are a fundamental trend, a mega trend, and frankly, something that I'm probably going to be talking about with you and your colleagues for 10, 15, 20 years. I mean, these are foundational changes for capital markets, in the same way that structured products in the 1980s or ETFs in the 1990s. They're still developing, still evolving, still maturing even today. And stablecoins and tokenized assets are going to be like that. There will still be checks, there will still be paper currency, there will still be credit cards, even in many years into the future. But stablecoins are going to take a bigger and bigger share of payments, money, and financial transactions. And people are going to start seeing this show up in the places where it's easy to begin integrating stablecoins. I think a likely place actually pretty soon is going to be prediction markets. Yeah. You can already onboard funds to the major prediction market platforms with stablecoins. but using stablecoins as the main asset, as the asset that you're transacting with whenever you're using cash on those platforms. I think that will be the next step forward. And you're going to see other integrations, stablecoins as collateral in derivatives contracts among on the Chicago Mercantile Exchange, and other places like this. So we are just getting started. The regulation is just coming together, and tokenized assets even earlier, frankly, than stablecoins. They're only about 1 to 10% of the size of the stablecoin market and have huge strides to continue to grow. That's going to drive value to Ethereum, Solana, Chainlink, really the kind of core infrastructure technologies of crypto. These are great ways to position for a future that has lots of stable coins, lots of tokenized assets. And again, this is something that we talk to investors about every day. And I would say, even if there's some debate about Bitcoin, frankly, there's really no question, I think, among major investors that these two trends, stablecoins, tokenized assets, are going to be a big part of capital markets in the future.
Yeah, you were mentioning Ethereum, Solana, and Chainlink. Chainlink is one of the cryptocurrencies that I have in my basket. My basket is not that big. I mean, I only have 3% of crypto, probably a little bit less now since the drawdown we saw recently. I mean, a lot of the audience already knows that I reside mostly in stocks that follow businesses. When it comes to crypto, it might not be for everyone because of the volatility of it. But also a lot of people, they want to invest in companies that report earnings and so on. When you think of cryptocurrency, it's much different. A lot of people probably don't really trade FX or use FX as a tool, derivative to invest in the stock market. But I mean, it is a very large market. Like it's only going to get bigger. And I think the volatility is going to get a bit more extreme, probably in the near term, not so much long term. Because of this argument that, look, you have a lot of dollar depreciation. On top of that, you have the Japanese yen continuing to get stronger, and you also have yields in Japanese bonds continuing to rise higher. And I know that we didn't really discuss this on the report that you reached recently, but you probably know that Japan did just vote a new prime minister that is pro money printer in Japan, and the Nikkei actually responded very positively from that. The Nikkei reached all-time highs, and I believe the yen is actually rallying off of that. But Japanese bonds or JGBs, Japanese government yields, Japanese government bonds have actually been dropping, meaning that the yields have been going higher. So we all know that as yields go higher, that means that people are selling bonds, and that means that the dollar is supposed to go up. But we've been seeing the opposite. So what is your perspective in terms of yields? Because we can actually connect this back to how Warsh wants to promote some sort of yield control, and that's the reason why the long end of the curve is actually rising, meaning that yields are going up and long-term bonds are going down. What is the impact of crypto, especially if you see the dollar go down, you see yields go up? Where does that money go exactly? Like, I wonder what your thoughts are on that one.
Yeah. We're in an environment of a lot of spending and a lot of investment, both on the government side of things and on the private sector side of things. There are governments in Japan, the United States, all around the world are running deficits and driving that spending back into the economy. So big deficits, lots of borrowing, lots of spending. And the private sector is doing the same, actually. And a lot of that is the hyperscalers building out infrastructure for an AI-centric future. And so you have huge investment in real stuff. We're kind of moving away from a market environment. Think about where we were after the financial crisis, where there was little borrowing and spending, and interest rates were very low. And the assets in markets that were doing the best were capital light software type of structures, and basically a lot of American assets. U.S. software companies were the darling of markets for a long period of time. I do think the world is changing at the moment. So it's sort of a different regime that's much more about spending on real economy stuff. It's happening all over the world. And I think there is some fragmenting of the world, that people are kind of going their own way, not willing to have hugely globalized supply chains for security purposes. So in my view, this means things like, aside from crypto, this means things like physical commodities like copper. It means old-fashioned tech like industrial stocks, and maybe less so, certain types of software. And I think it might mean other countries like emerging markets. EM equities have been doing excellent. That's something that I think can continue. EM equities, EM fixed income. So besides crypto, that's kind of what's interesting to me from a portfolio standpoint at the moment, is investing for this different type of macro climate that's very different than what we've been in the past, and that's characterized by everybody spending on real physical things, as opposed to just kind of capital light software. Now, crypto is a unique asset class. It is something completely different than traditional software or physical commodities like copper. It has its own mega trends with it, related to regulatory clarity and adoption of this technology in the financial system, and it has an element of scarcity that makes it very different than other types of software. Bitcoin, Ethereum, yes, they are digital things, but they're also scarce commodities. So to me, crypto can fit very well in the context of a diversified portfolio that's geared to this kind of different type of macro climate than what we're used to in the recent past.
Yeah, I think that, there is a bit more diversification when it comes to crypto, and arguably even certain currencies that are not Ethereum and Bitcoin have much more of a fundamental thesis behind it versus like back in 2017, where it was like just a bunch of pump and dump. You probably heard of Tron, Justin Sun, who was Alibaba's CEO's nephew. And I still remember those times. Like, those times are crazy. Like, you were just buying whatever was going up. But now you actually have some fundamental backing of a lot of currencies out there, like ones that you named, Solana and Chain, like at much higher market caps too. It's crazy just like seeing how much things have grown, but at the same time, the long-term bearish thesis is still there for a lot of people. And it's like mostly attributed to price action. I mean, if crypto wasn't going up like 10% some days, down 10% some days, and it was just like slowly rising, had its volatility, and volatility was suppressed as much as gold had been, it would probably be a much different story. But at the same time, it probably wouldn't attract as much volume in capital, because a lot of people are in it because of its volatility.
Shorting crypto is nuts in my view. This is a very fast growth industry, high returning asset class. Of course, I realize that we've just gone through a 50% drawdown, and that kind of changes the nature of the color commentary. Maybe to use a football analogy, coming after the Super Bowl, a kind of winning team, puts up a dud every once in a while, and maybe that's where crypto is. But certainly, you don't want to kind of lose sight of those fundamentals. And it's okay not to participate in the crypto asset class. People are up to
the good old rug pull again. It waits. It literally waits. It waits until Zach talks in order to rug it.
all kinds of different things in there.
Here it comes. At least crypto's staying afloat. Yeah, you're back. Crypto's not rugging, so it's always a good thing that that's not rugging whenever you get rugged by the internet.
Absolutely.
So I totally missed what you just said. It cut off probably like 10 seconds into what you were saying.
All good. Look, I think I'm as people know, I'm very optimistic about where the crypto asset class is going, and it's okay for people to not participate, and that's okay. Betting against it strikes me as a very risky proposition, given what I see.
Yeah, we're actually sitting around the previous all-time highs in Bitcoin right now, a little bit higher than that, but I would have never thought we'd see 60K again. And here we are today. Like, yeah, we're above 60K, but Man, the volatility of this thing, like for me, this is one of those things where I can't stomach it. But I know a lot of people who can, and good for them. I mean, I feel like if you have a much longer time horizon, then these volatility swings shouldn't really scare you or anything. I mean, people usually get most bearish near the bottom, and I did see that headline. I did see that ad, or it was like a front page. Where it was like saying, is there more downside with Bitcoin at like 69K? It's like, buddy, we just dropped like 50K or more than that. And now you're getting bearish. Like, it's just, the bearishness usually gets the strongest near the bottom. And even if this isn't necessarily the bottom, because no one knows where it's going to be, like, I don't know. Like, people really get so bearish at the bottom, and that's what causes short squeezes. I mean, jumping like 10K in just a few hours is a very difficult thing to do, but it did drop 50K in a matter of a few months, which is still a lot. And I don't know if is gold a higher market cap than Bitcoin right now? Because I remember reading before that it was a higher market. No, it gained the entire market cap of Bitcoin in like a couple of hours, which is just crazy to think about, because you would never really imagine that to happen. But since then, I mean, gold's pulled back pretty dramatically. And I feel like that liquidity that's taken out of gold and silver in terms of volume, it needs to go somewhere, right? So it is the money has to go somewhere. I always say, like, the money in the market, the money just moves around, right? Like, we're not in an all out, like, even like the last few weeks, like, it was just rotation. It wasn't necessarily money just disappearing from the markets. Like, it was going somewhere, and the money just moves around all the time. Like, there's always a buyer for every single seller. And the thing that makes markets goes up is because the buyers become more aggressive, where they're taking out the ask versus just buying the bids, right? So, it'll come back. It'll come back at some point. I think the bigger question is, when is it going to come back? You were talking about football for a little bit. I guess since we're coming to the top of the hour, if you don't want to, you don't have to. But who are you rooting for in yesterday's game?
I was rooting for the Seahawks mainly because I love a redemption arc story, and Sam Darnold definitely has had that sort of journeyman, redemption arc kind of nature to his career. So for me, that was maybe the most interesting storyline. But look, it was a fun game. I will also say I loved the Coinbase ad. That's generating some buzz on social media today. I was at a big family event with multiple families and kids and adults and that sort of thing. And it was the one thing that really froze everybody's attention during the game. So, in an attention-starved environment, so hard to break through, I thought very impressed with Coinbase, able to break through in that way. Very, very clever in my view.
Yeah, they have a lot of they've been advertising for quite some time. I still remember the first time I saw that ad for Coinbase. Was Coinbase the one that had just like the QR code that was just flashing across the entire screen? Okay, that was Coinbase. Yeah, I still remember that. Hey, at least they weren't the company AI.com that paid millions of dollars for their ad, and then their website was down right after that. Like, that's the worst possible thing. But yeah, no, it's definitely gaining a lot of momentum in the space. Maybe not so much in terms of price action, but in terms of popularity and adoption. But that's good to hear. I would, going back to the football thing, I mean, just kind of knew the Seahawks were going to win. Like, it didn't seem like the Patriots were going to win, even though the spread disagreed with that. But like, they kind of had the easy path to go to the Super Bowl. I don't know. I mean, the Broncos probably would have stopped them, but Bo Nix was out. So, you're playing against a substitute quarterback and was finding a very hard time winning that game. I think I was pretty sure that Sam Darnold was going to pick that game up, and it looked like it was a very slow game in the first half, kind of picked up in the second half. But yeah, I mean, congratulations to Seahawk fans, and I'm sure the Patriots will be back again next year. But great talking to you, Zach.
You too, Sam.
Thank you. Yeah, thank you for coming on here. Looking forward to our next talk in a month. And for anyone that wants to check out the previous shows, you can check out the previous shows in the Wolf Financial channel. Or even the Wolf Financial YouTube account. But I'm going to throw on over here Zach's Twitter account. He releases a lot of macro information out there, especially things that are impacting crypto. But that's one side that I really like to focus on, the macro, because ultimately the macro is going to dictate the long-term direction of the markets, whether people like it or not. You can buy companies that are progressing good in earnings, but if the macro doesn't agree, it's going to sell off that stock most, like 90% of the time. But pretty good macro backdrop. things are looking very good for Kevin Warsh. And as far as the Fed coming up, and that's always good news for risk assets, including crypto. So yeah, there's Zach Pandl's X account there, x.com/. Actually, hold on a second. My mistake, guys. Wait, that is not, it is low beta. So yeah, that's right. You got rid of
that's right.
You got rid of that underscore at the end. I mean, even people search for it, they will still be able to find it. But there it is. There it is. Low beta. That's an easy one to remember.
Very easy.
Definitely heading for the low beta with crypto. That's for sure. Definitely heading for the low beta. But yeah, thank you very much for joining us, Zach. Really appreciate you. And tune in for the next one, guys.